Mark, how's the swing trading program going this?
Today we're going to talk about the golden cross and the death cross and how they're used in technical analysis. Many traders use moving average crossovers as a tool within their trading plan. When a short-term average price crosses above a longer-term average price, it usually indicates a stock is trending higher. If the short-term average price crosses below the long-term average price, it usually indicates the trend is lower. The most widely used indicators are the 50-period and the 200-period simple moving averages. The death cross occurs when the 50-period moves below the 200-period and is considered bearish. The golden cross occurs when the 50-period SMA moves above the 200-period SMA and is considered bullish. Let's take a look at a few examples. United Healthcare is experiencing a death cross. You can see right here the 50-day simple moving average crossed over to the lower side of the 200-day moving average. You can see what happened here in price action. This is a golden cross. It's on the SPY. You can see that the 50-day simple moving average has crossed above the 200-day simple moving average. You can see the price action has gone up. Thanks for watching. Have a great day.